Hello, everyone. Welcome back to the Zen Lounge. Thank you for joining me today. In this video, I'm going to be talking more about the why. Talk about projects that are going after the tokenization of real-world assets onto the blockchain all the time here at the Zen Lounge. But why am I bullish on this? There's so many big industry players that are talking about the benefits of tokenization, and there's also so many reports that are talking about the potential value of this problem that could be solved. I've been Googling I've seen all different reports. This report says asset tokenization can grow into a $16 trillion opportunity by 2030. The way I look at it, if I'm able to find a project that actually even just captures a sliver, a fraction of this 16 trillion, let alone all of it, I believe like getting in this early, people are going to look back on this time and be like, dang, I can't believe people had that opportunity to invest into the tokenization of the future financial world. That's why I'm really excited about it. But it's not just me. The reason I'm bringing this topic up again, because on January 13th, Larry Fink was on this show called The Squawk Hawk. And he too mentioned that he's excited about tokenization of securities, tokenization of assets in this video that CNBC posted onto their YouTube page. It actually wasn't in this video. You have to go to the transcript. They purposely cut it out, I think. But you could see this was posted January 13th. Larry Fink wants to tokenize stocks and bonds. And if we read into this transcript, he says, we want to democratize the vote. This is one of the reasons why I'm focused on the whole idea of blockchain for securities. I look forward to the day when we could tokenize stocks and bonds, that every stock and every bond we can identify immediately who is the beneficial owner. And this is why we're working on it. It's very beneficial owner from an individual to an institution to have the ability to vote, to democratize every single vote. That's where we want to take this, and we're leading the effort. The Sologenic, is tokenizing securities. I talk about that project all the time. And then Quorum is a layer one blockchain built off the Cosmos SDK, which would be great for that. There's governance features built into Tendermint. So this isn't the first time he's brought it up. He said BlackRock CEO a month ago said the next generation for market is tokenization. BlackRock joins a number of firms backing the tokenization of security despite the CEO's wider crypto cynicism. And that's kind of like what this article is about. It says, this article right here says, now I know cryptocurrency industry is here to stay. A longtime crypto skeptic who once called for a ban explains why he organizing high-level crypto conferences at Duke University. So the most prestigious universities are now getting involved, even though they were once critics. So you can see right here. I'm not going to read. There's a lot of fluff in this article, so I'm just going to get to the main points. I've also spoken with countless Duke students from across campus, including students in our groundbreaking Master of Engineering in Financial Technology program. And they are passionate about digital assets and blockchain technology and want to make a career out of it. These students are not motivated by the desire to make a quick buck or buy a Lambo. Rather, they find the subject matter intellectually engaging and see an opportunity to get on the ground floor of a nascent industry with great potential. That's what I was kind of say. Like the first article I showed you guys was talking about the asset tokenization market could grow into a $16 trillion industry, right? And if you could get in a project at the ground floor, wow. So finally, I know digital assets are here to stay because the leading figures and firms from the traditional financial system say so. Writing in the Wall Street Journal last month, Goldman Sachs CEO David Solomon said that he sees blockchain as a promising technology that is already changing how corporations will raise money. Now investors trade stocks. As evidence, he cites Goldman Sachs' use of blockchain to client trading platforms and its underwriting of 2-year, €100 million digital bonds for the European Investment Bank with 2 other banks, all based on private blockchain. Also, last month, what I just told you guys, BlackRock CEO Larry Fink said that the next generation for markets, the next generation for securities will be tokenization of securities. We've already seen several high-profile examples of tokenizations last summer. JP Morgan's Onyx digital asset blockchain-based network transferred tokenized shares in a BlackRock money market fund. In September, private equity giant KKR tokenized shares a feeder fund for the main KKR Health Fund Care. So that's really exciting news that this is going to be a big trend going into the future, and us researchers can find these at the ground floor level. You know what I'm saying? So I'm also going to get into another big point that we've been addressing all of 2022, and I'm still going to keep addressing this point going into 2023 is decentralized finance. DeFi is the future. Centralized exchanges are on their way out. We want to decentralize the world, right? And if we could have easy, user-friendly, decentralized exchange, what's the point of centralized exchanges? Eventually, they won't be needed. So the collapse of FTX and other centralized crypto firms over the past year has led to renewed calls by crypto supporters for return to crypto's decentralized roots and an embrace of decentralized finance, DeFi. As noted in the recent Federal Reserve Bank of New York blog post, I'm going to show you guys that in a moment. DeFi protocols appear to have continued to function as intended in 2022, and no protocols have been closed down. Our conference will dissect DeFi's performance over the past year, and DeFi's future growth potential, and panels on decentralized exchange and DeFi applications beyond exchanges. Now we're going to go into Duke. So digital assets at Duke has also featured panels on tokenization, central bank digital currencies, security, and institutional adoption. In sum, the conference will bring together the people and companies that are focused on the development, delivery, and regulation of the next generation digital asset environment. And that's exactly how Corium's promoted third generation. This is the next generation. They're focused on all that's mentioned: institutional adoption, central bank digital currencies, and tokenization. Also, Corium's focused on on-chain identity. So this is the New York City blog post. Can decentralized finance provide more protection for crypto investors? You can see Federal Reserve Bank of New York. So, you know, DeFi is going to be the trend of the next bull run. I firmly believe that. Just read this right here. Could DeFi protocols protect better investors? But what's most important, especially for the new people, is what DeFi is going to allow you to do is have custody of your own assets. You're not leaving them where somebody has controls to your private keys of your assets. In DeFi, unlike centralized entities, users maintain self-custody over their assets, meaning they retain control of their private keys for accessing their tokens. For example, in a DEX, a smart contract called an automated market maker, AMM, pools tokens deposited by investors using an algorithm to price them in liquidity pool. As the AMA returns their share of pool tokens to the liquidity providers, whenever they exit, customers' tokens cannot be misused. When is that going to be activated on the XRP ledger? In this video, I'm going to show why XRP ledger is perfect for tokenization. I have some videos to show you. And the AMA's XLS 30 needs to be voted on. It's in test mode right now, but once the XRP ledger validators vote in XLS 30, we will have automated market makers live that me and you can participate in with their XRP and XRPL based tokens. So that's really going to be important if we want the XRP ledger DEX to become adopted. We need to have proper liquidity. So last news before we go on to do a couple educational videos, Crypto Cito is now highlighted. He is the #1 Cosmos influencer. If you guys are looking to get active in the Cosmos ecosystem, definitely check out Crypto Cito's YouTube channel. He has amazing content for Cosmos. But adoption of the IBC, just as the Zen Lounge talked about all 2022, ILP, IBC plus ILP, all I need to be free. Remember I was saying that all last year? IBC plus ILP, all I need to be free. So adoption of IBC outside of Cosmos is skyrocketing. We have XRP Ledger connecting to IBC, to the Cosmos via Corium Official. We have Polkadot and Kusama via Composable FinTech. We have Solana via Nitro Labs and Eclipse. We have Avalanche via Cosmos AVAX. Yes, which ones are you missing? So the #1 Cosmos influencer is now talking about Corium. You know, for the first time, I really feel like, you know, I'm blessed to be early to something here. Knock on wood, But CryptoCito, brand new Cosmos chain, is in the works and enables IBC compatibility to the XRP ledger, tagging Quorum official. IBC adoption is progressing at rapidly across many ecosystems that are not native to Cosmos. So this is very bullish news. Hope you guys enjoyed this video. Now we're going to transition. I have a couple videos to share with you guys. Stick around, enjoy the content I put together. And thank you for coming to the Zen Lounge. Please give me a thumbs up. Please leave some positive comments and please subscribe. My goal is to hit 10,000 subscribers. If you guys can help me do that, thank you. Everybody, peace.
Hi, and welcome back to our series on the XRP ledger. In this episode, we'll define some basics of tokenization. The XRP ledger was the first blockchain to support the tokenization of a variety of assets. This includes stablecoins or other forms of value, anything from US dollars to euros, gold, stocks, and other cryptocurrencies like Bitcoin or Ethereum, and even non-fungible tokens that might represent valuable items like pieces of art or cinema tickets. Tokens are often called issued assets, or IOUs, on the XRP ledger. This terminology comes from the fact that these assets do not physically live on the ledger. The IOU represents those items of value outside the ledger. It's what somebody will owe the holder of the token. So if a token is issued on the ledger that represents, say, a piece of art, the person who acquires that token is then owed the art that's represented. And any token on the ledger, including tokens for art, fiat currencies, cryptocurrencies, and more, can all be traded directly on the Decentralized Exchange, or DEX, which we cover in depth in another episode. Anybody can create a token on the ledger, and they don't need a smart contract to do so. It's a native function, built into the XRP ledger. It's also fairly simple to tokenize an asset. It only takes a few lines of code, or the use of a web interface that walks the creator through the process step by step. To learn more about the fundamentals of the XRP ledger, please watch the next episode.
We have evaluated many different technologies as candidates for our tokenization platform. Every chain has pros and cons, obviously, but the ones that we seriously considered were Ethereum blockchain, ERC20 standard and others, and the XRP ledger. We found that the XRP ledger almost offers exactly what we needed. Regulation obviously played an important role in our decision making. XRP ledger allows us to comply with the regulations by using a feature called authorized trust lines, or trust lines in general. And of course, it is fast, it is secure, it is environmental friendly, and one of the biggest things, the built-in decentralized exchange capability of the XRP ledger offers a significant value for our users who can exchange tokenized assets on the ledger. Other things that were a key factor in our decision-making were ability to interact with the tokens after they are issued. For example, paying dividends or handling stock splits and so on. On-demand tokenization is a great feature of Sologenic. It allows investors to tokenize any asset offered by the platform on demand. This allows us to offer a significantly larger portfolio of assets in our platform, where supply and demand actually decide what needs to be tokenized. Generally, these tokenized assets can be bought and sold in fractions on the blockchain. But we also wanted to break down the process further and more and have more accessibility for our users. So we created pool orders where users can contribute in pools of trades to be tokenized. This gives our users the power of tokenization or tokenizing on the blockchain with a much lower capital. We have three main actors in this whole ecosystem. One is Sologenic, that acts as a brokerage and facilitates the technology for an asset to be tokenized. The second is the user, who decides what needs to be tokenized and invests with any amount of capital and tokenizes an asset. And finally, the third is the user, who trades, buys and sells these assets on the blockchain in fractions 24/7. This allows any user to conduct things like market making and other activities on the blockchain. So for example, a user comes to Sologenic platform and decides to conduct market making for Tesla. They can simply tokenize 10 shares and take it to their personal wallets and start market making on the blockchain. And of course, they can detokenize or burn or redeem these tokens at Sologenic by selling them back at market prices. So in a nutshell, Sologenic is a bridge between traditional financial markets and assets and the blockchain. Some of the challenges that we faced were, of course, meeting the regulators' demands were one of the most important things. What we've done here, on-demand tokenization, has never been done before. Even if you see, for example, a stock or an asset from a stock market is offered on the blockchain, different other blockchains, it is most likely that it was tokenized and it was offered for trading. But for Sologenic, a big challenge was to show regulators that we are meeting their regulatory requirements and demands, and we are in compliance for on-demand tokenization. And of course, at the same time, educating a disruptive technology wasn't easy. Security of on-demand tokenizations is very tough, and it needs to be done very precisely, because these types of systems are prone, and if an attacker or a hacker gains access to the issuer or the gateway wallet, they can potentially issue any type of assets. So it poses a big risk if the system is compromised. And so that's why we designed a very sophisticated system that uses the multi-signature capabilities of the XRP ledger, where each signer acts independently. These signers are placed in an unknown, isolated location. They are separated in different locations, and they sign transactions once they check the validity of the transactions with one another. So this gives us the peace of mind that if one system is compromised, the other ones will not sign the transaction. So these were some of the challenges that we faced.
Has this changed your view of crypto at all? You now have a deal with Coinbase, and yet you were always sort of also, I think, a bit of a skeptic of all of this.
Oh, I actually believe most of the companies are not going to be around. I still believe that. I do believe
because they're now real, they're frauds, they're what?
Well, think about FTX. You could look back now. FTX created its failure was it's creating its own token. It was not a DeFi. It wasn't a ledger that was open to the world. It was a closed ledger.
Right.
It was not distributed. So the whole foundation of what crypto is, it's supposed to be a distributed ledger that is across the system. I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in an ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem. You don't need trust banks.
But does that disrupt you eventually? Because you are custodying all of these assets.
No, we're not a custodian. We're not, we use third-party custodians in everything we do.
In everything you do?
We're not a custodian bank.
So your goal, by the way, I don't think that he was technically a custodian either, which is a separate issue.
I think they were. I don't know if there was a real custodian in that closed ledger, but that's a whole other story. You should ask him that question. No, the transformation, think about instantaneous settlement, bonds and stocks. no middlemen. We're going to bring down fees even more dramatically. As for me, I don't have to vote on any shares anymore because the beneficial owner will do all the voting. They'll have it.
And that's where I want to go with this conversation.
Okay, I knew I was going to take you there.
Thank you.
You're going to launder money. It's been cash up to this point. So, I mean, Bitcoin is probably...
Or jewels.
Yeah, okay, but Bitcoin's probably, for total money laundering, it's probably 0.0005. So why pick on Bitcoin for the money laundering when it's obviously hasn't been used up to... Al Capone never had any Bitcoin.
So I assume you're also talking about Libra then, too.
I don't want to... Libra I don't even think is a cryptocurrency.
I don't either. That's what I was going to say.
And I don't think it has any inherent value.
Besides, it's a debit card.
And I don't want it centrally... I mean, and Mark Zuckerberg's involved, and everybody gets to keep the float all...
Let's talk about the concept, though.
Yeah.
Forget about who's created it and what it's trying to do.
Yeah.
You know, I was in Europe this past week. I had to buy a new briefcase because mine broke actually there.
When I was carrying cash to launder?
All jewels.
Yeah,
no.
Right.
And when I was going to sign the receipt or the electronic thing, they'd asked me, do I want to pay in euro or dollar?
Yeah.
And I said, okay, dollar. Then I looked at it. I'm still being charged at 3%.
Terrible.
Okay? So, and when you think about all the people who send money, you know, they may work in one country, send money back home. They generally do that through organizations that charge 5 to 10%.
Yeah.
There is a need, whether it's a Libra or something else, to democratize the exchange of foreign currencies. Today, with computers and electronic market,
There shouldn't be that.
it should be 10 basis points, 5 basis points.
That
It's
makes
not
sense.
percent. And so I actually believe the idea around Libra, I don't think we need to create a new currency, but the technology to instantaneous calibrate all the currencies, that should be done.
Who gets squished by that? Who are the middlemen who are making money on that?
The banks.
You know, we're making, as the Bitcoiners would say, that's progress for you. At least to get to the point where you're saying that about Libra.
No, but
you're still not saying that about Bitcoin.
I think Bitcoin
but
has,
even,
But he's saying that's blockchain,
Bitcoin
I don't know if
is,
Libra is blockchain. They haven't decided. I might do
it has to be some form of that.
It's just ledger.
I mean,
Right, but it's
just
a basket of fiat currencies. It's like,
But you
Yeah,
don't
but the
need
crypto
that.
is just keeping track of
there's
it.
no inherent value.
But you don't need that. If you had this mechanism in every transaction, you could minimize the transaction
That's
costs.
the whole idea, right?
That's what the whole idea
I
is.
know.
And that's what I loved about it.
Yeah.
I don't believe we need a international currency like that. There's no need. But there is a huge need to bring down the fees of the interchange.
Need or not, it's here. And
So
it's not,
the banks have not wanted to eat their own, like, to cannibalize themselves.
this is a
but
big
when you see pressure
cannibalization.
like Libra, do they all get on board pretty quickly and say, okay, wait a second, I'm not going to lose my market share?
No, there's going to be some mechanism of doing what I said, the calibration of currencies that's going between. That can just, I mean, you don't need a Libra. You have computers that can monetize and calibrate euro to dollar instantaneous for a couple basis points, or yen and all that.
Next time, come for the full hour.
You're evolving.
I got to go
I
talk to
know
my
you're busy
shareholders
today. We
now.
appreciate
evolving.
that. It's great to
I
see
see
you.
an evolution here. You're evolving and making progress. Thank you.
I'm not a Neanderthal anymore?
No, not as much. Okay.
As
You
gauged
moved
by
up
different-
your Cro-Magnon.
The world's got trillions and trillions of dollars tied up in liquidity just to get around how clunky the movement of value is around the world. If with a really efficient digital asset, something like XRP, again, that's what we believe will be the most efficient, you can now reduce trillions and trillions of capital from being tied up. So you can make those transfers instantly as a bank or as a payment provider or as an enterprise without having to have money pre-positioned all over the world.
The real estate industry is obviously one of the most obvious spaces or industries to bring onto chain. We felt that we could use tokens to exchange value and build a better level of trust in these relationships.
From the perspective of recruiting high-value talent for something like building a gigafactory in Nevada, being able to target and cryptographically prove that someone, for example, took a specific class, got a specific grade, participated in a specific club. These have tremendous economic value.
Particularly here on Squawk on the Street, thank you for joining us this morning.
Well, happy New Year, David and Jim.
Thank you. And to you. Speaking of the new year, I was looking at your sort of memo to colleagues where you talk about the current operating environment being unlike anything we've seen in decades. You talk about 2022 being a year of huge transition. How do you see this year shaping up, Larry? More of the same, or, are your expectations perhaps a bit different than what we've seen last year?
Well, from the perspective of long-term investors, I see 2023 to be enormously opportunistic. Actually, maybe the hardest years for investing for the long term were the last few years because of negative interest rates. Investors worldwide had to take on more and more risk to achieve their liabilities. Actually, now having 2-year Treasury is going to be close, at 4.25, credits at 5, high yield at 8%. We're going to see a whole restructuring and a rebalancing of how portfolios were constructed just a few years ago. And you're going to see now, once again, more bond investing within the confines of pension fund investing. In 20 years ago, most pension funds had 60-70% in bonds because they were able to achieve their role and their goals that they were trying to achieve. By 2018, they could not own bonds. They had to put on more and more illiquidity. And so in reality, we're going to be seeing more and more opportunities of rebalancing back into bonds. And as you talk about a lot about growth equity, when interest rates are near zero, you have the ability to buy high growth stocks because you're not losing any money. If short rates go up to 5%, you're paying a big premium for that type of perceived growth. And that's a recalibration that we saw in 2022. And now we're living in an area where you're going to be able to invest differently. In addition, we are seeing more and more investors looking at infrastructure, where you're going to have a combination of some illiquidity, but you're going to have high coupon. I think this is going to be a period of time with more dividend stocks again as a play. So I look at this as more opportunistic. And probably the most important thing of our announcement today in terms of earnings has been BlackRock is winning more share of wallet than any firm in the world. In good markets when markets are going down, or in bad markets, good markets when markets are going up and bad markets are going down. This past year, we had $400 billion of net inflows in long-term assets, of which $230 billion came from the United States. And so we have now raised about $1.7 trillion over the last few years. From investors awarding us in good times and bad times because of the guidance we're giving and also our performance and our fiduciary standard.
Understood. And, last year, though, was distinguished by the fact that whether you own bonds or stocks, you had a bad year. You seem to be saying, I don't want to read into it too much, but tell me, are you expecting bonds to sort of become a better performer during the course of this year, which would seem in some ways to say, well, maybe there won't be as much buying behind equities for the year?
Well, I mean, we still see one or two more tightenings. We see obviously a very inverted yield curve. So the market is saying, I'll buy coupon here. I'll buy it. But what I'm saying is we are going to see more and more of long-term pension funds reallocating back to bonds, more into bonds, as they receive new pension contributions. We're going to see more of that. That doesn't take away from the equity market, but I do believe you're going to see, as we're witnessed in 22, we saw a whole recalibration of price-earnings ratios, especially in growth.
But Larry, to your point, I mean, the bond market is now actually competitive with the equity market. As you said, in 18, it was like, I can't get a return anywhere. This is a very different world now in 2023.
It is a totally different world. And it's actually an easier world to take. You're going to take less risk to get to your target now more than ever before. So I would frame it, obviously we had the nightmare of 22 with both bond and equity markets down, but if you start today and look at the opportunity today, you actually have more opportunity going forward to invest with less risk and reaching your target returns that you're looking for the long term.